Hey all, welcome to Share Trek. This is Raj here. It's not a funny situation, but I'm kind of a person who wants to laugh and cry at the same time. It's mixed feelings, and you will know why. So let's get started. Hey guys, I'm very happy to announce today that we have our first two Patreons already signed up. The first one is Inf, a longtime friend of the show. And the second one to join up who signed up today is Jason. Thanks Inf and thanks Jason. Thanks for joining up and helping me out. We need 48 more patrons, and those of you who can afford it, please do sign up. I'm looking forward to meeting you at Patreon. Thanks. Welcome back, friends. I'm absolutely excited and happy because on the HIV programming side, we have our Patreon up and running, and we already have two Patreons. So I want to give a big shout out to Inf, who was the first one who joined us up as at the benefactor tier, and then we had Jason joining up today at the friend tier. So there are two already. I'm just waiting for 48 more so that we can sustain the HIV coverage. As I mentioned, my bandwidth is limited, and the workload has increased significantly. It's almost become a full-time job. So I'm really thrilled with that, and that's what makes me happy. So thanks Inf and thanks Jason for setting the ball rolling. I hope you have a great day, and on behalf of all the people who are looking for HIV programming, I thank you for supporting the channel. With that said, now I have to revert back to the part that makes me sad and mad, and that is the state of the markets. Friends, before we look into the market, I want to talk to you about another contagion that is coming our way, which we have not yet felt completely. But maybe in the next month or two, we'll feel the full impact of it. And I'm going to explain that why. It will take around 4 or 5 minutes. Please bear with me and listen through this. I'm not going to go into nitty-gritties, but I'm going to talk in reasonable level of detail so that you can understand the concept. So we have these startup companies in Silicon Valley, and for most of the startups, as you know, they have a series of funding, and the funds that come in, it's used for all their R&D expenses and salary expenses. So they get a lump sum of cash, and then they put that cash into a bank. And there was this bank called as SVB. That is this bank called as SVB, whose business model was to attract all this cash, because you see, you can get a lot of cash lying around with you as these startup companies slowly work their way through their funding. And when the funding comes close to exhaustion, they have fresh round of funding. So SVB had a great business model, and they never ran short of money. And I was thinking to myself, what could go wrong? So if you look deeply into this, what happened was that they got a lot of funds from all these startups, and they became the darlings of startups. And they had lots of cash lying with them. Now, typically when a company has got a lot of cash, or a bank has a lot of cash, there are treasury operations which are done so that the idle cash starts making some money. Because if you keep the cash idle, you are losing money to depreciation. And also it doesn't make sense if you're a business and you're paying people to manage money that they should get some return out of it. So at that time, SVB treasury guys thought that treasury was a safe place to put. So they put money into the US bonds, and you know what happened with the bonds, right? With the interest rate going up, the bond yields started going up. So what that means is that if you had an interest rate of 1.5%, which is approximately the rate at which SVB had invested, I think $75 billion or something, don't hold me to the number, but a good portion of their cash. So they invested it at 1.5%, which means that you buy a bond for somewhere around $100 minus 1.5. And on maturity, the government will pay you $100. That's how you get the money. So this was a 10-year bond that they had invested in. And at that time, the interest rate was 1.5%. Now, as the interest rate goes up, you have to pay less to buy the same bonds, because the interest rate is high and the government has to pay you more. So the government takes less from you to sell the same face value bond. So as a result of which, all their bonds lost a good deal of value. And when the bonds lost value, it became imperative for the bank to raise fresh equity so that they can shore up their equity, because banks need to have equity and banks work on trust. So when people have trust in a bank, they come and deposit money in there so much that the bank can actually charge you for keeping your money with them, and for the pleasure of withdrawing your own money, they can put a lot of charge and fees and everything. That's par for course. But when people lose confidence in a bank, then they run away with the money. They take the money as fast as possible. They do a run on the bank. So basically what happened with SVB was that many of the advisors to startups started telling the startups, you better take away your money from that bank, because if that bank goes down under, then you're going to lose all your money and you're dead as your venture capital is gone. So many of these banks started moving the money. So that was the story of SVB. Now, whatever happened to SVB, something similar happened to another bank. And that bank was dealing mainly with crypto. This bank was Silvergate Bank. And their business model was to tie up with crypto companies like Coinbase and others. And the main thing that these companies wanted from the bank was to convert crypto into dollars. And they had a lot of funds. The crypto companies had a lot of funds sitting with the bank. With regard to Silvergate, what happened was that they got a lot of money from when the crypto was going high. And then when crypto started becoming unstable and started going down, steadily people started withdrawing money. And while they were flush with funds, they had invested in government bonds at a lower interest rate. And since then, the interest rate has been going high. So they were again forced to sell some of those government bonds, and they incurred a loss because interest rate had gone up, yields had gone up. And as a result, the face value of those, or market price of those bonds had fallen. So they ended up with a loss. And when a bank has a loss like that, then they have to raise fresh capital. And when they raise fresh capital, the message goes around that the bank has got some problems out there. So finally, to cut a long story short, they started discontinuing some of their services of holding crypto deposits and paying for all these companies like Coinbase and other exchanges. They stopped their exchange activities. And the latest news is that they are going to orderly wind up their business. So coming back to the point that I was talking about with these two banks is that banks are not the only people who have invested in government bonds. There are a lot of other entities who have invested in government bonds. And I reckon that they would be looking at their balance sheet. And if they look at the market price of those bonds, it will be way down because of their raising interest rates. And as a result of which, if they are in an industry where they need the money immediately, they are in a situation that they need the money immediately, they have no option but to sell those bonds. But if the company has got the capability to hold on for a longer period of time, they can end up getting all their money plus the interest, and potentially they could even have better returns because eventually the interest rates are supposed to go down. So it's all a question of how strong the company is and how much longer they can wait to get the money, and also the factor that there should be no statutory requirement that they should have a certain amount of funding in their balance sheet. Because if there is a requirement like that, then they're definitely going to run short of money, and they will need to shore up their capital in order to make up for the deficit of the value that they lost in their government bond investments. So I do not know how many companies are going to be affected by this. And as they say, when the tide goes down, you find out how many people were swimming naked. So that's an old saying. So we are soon going to find out how many people have been swimming naked. And how soon can this happen? I really don't know. It depends on various industries and various requirements of capital and disclosure. If people are not required to disclose, they can ride it out for a longer period of time, I reckon. So that is one aspect which is simmering in the bottom, right? Apart from the geopolitical thing where I was talking about Pakistan is already defaulted, but they have not yet declared. They don't have money for anything. They are in a very, very bad shape. Sri Lanka just got a bailout and it's trying to get back to its feet. And of course, we have the Russia-Ukraine war, which is consuming a lot of resources, like so much of energy is going into it. And the result of that is going to be food inflation coming in for the next season, because wheat is not being made out there, sunflower oil is not being made. So all those shortages are going to come up to us along with all these inflationary tendencies. And of course, back in US, we don't have political stability, and the way the politics is going right now. I don't think the focus is on the actual issues which really matter. So it's not a very good situation. Now, in the backdrop of that, today we saw our genomic stocks being battered. They were being battered like one beats egg to make cake. It's so terrible to look at. I could literally puke when when I see the charts, but it's really bad. And I think that it's going to be a period of turmoil for us because there will be some good news coming in and the shares will jump and people will start taking profit. It will fall again. It's going to be a yo-yo kind of a situation. Now, in the midst of all this, I would like to just have a quick look at the TradingView platform to check out some of the key indicators and also our genomic stocks, just to have a look at how much damage we are in. I think things are looking really bleak on the charts today. I won't blame any of you for feeling really down. And that's the reason why when I started this show, I was saying, I feel like laughing and crying at the same time. I'm happy because the HIV Patreon has taken off and we have got 2 Patreons in here. And at the same time, when I look at the indices here, it's really, really terrible situation. So let's look at the TradingView platform. So first chart we have here is NASDAQ futures, which is down minus 0.32. And it has fallen below the line of support that was there before. So it's back into this bear channel. And I think it's going to stay down there. The chart is not looking great. And then if we were to get into our indicators, US oil is coiling between these two ranges. As before, it's getting narrower and narrower. And I don't see how the economy will be able to support higher oil prices. Let's look at QQQ, which was down 1.40%, and it's still within this bear channel. It has got a support out here at 286.35, but the chart is looking weak. MACD is bearish, and also momentum is below average and falling further. And then we have S&P 500, which is in a really bad situation, further bad. I'm just going to pull this out to make this longer, and I'm going to pull this out to make this longer. So we already touched this support line and we went back today. If you look at the chart here, you will see. I'm just going to expand this so that you can see. We touched down here and then moved back up again. And we are still below this line of support which we had before. So I'm going to convert that into red to show that it's a line of resistance. And you know which the line of resistance is? It's going to be the big bear channel in which we were before. We have re-entered into it. And we'll have to see whether we are going to bounce back from this channel or we're going to continue a new bear channel going down further and going deeper into this master bear channel. We have done that before in the past. I'll show you a whole multitude of bear channels out here. This was a bear channel. And we have many more like that. So I think we are re-entering that area. MACD is absolutely bearish. Momentum is also very weak. Dow Jones, look at the way it has fallen. 3 consecutive days of fall. And it has fallen. Let me just, for context, let me take this measuring widget. It's fallen 4.8% in 3 days. 4.82% in 3 days. That's phenomenal. And MACD and momentum both are bearish. And if we look at Russell Index, it's fallen even further. And yeah, overall, everything is looking very dejected. And look at the volume of sales in Russell Index. It's broken all kind of records. It's been panic selling out there. And look at the momentum. It has gone below the civilization zone and it's going to hit one of those support lines there. MACD is wildly bearish. And the VIX has elevated. It went all the way up to 28.95 and came down to settle at 24.92. So things are looking bad. But one silver lining is that our natural gas is still remaining low and oil also has not spurted. So those two things are positive for inflation. So I'm happy about it. Now, if we were to go and look at our genomics, look at Bluebird. It has lost 15.93%. So much for the hype. So much for the hype. When I make a prediction that I try not to make predictions, I always put a caveat there that we are only doing probabilities. But when I say something and it doesn't happen, I feel really bad. And now we have paid portfolio managers and analysts who said that Bluebird has got a higher price target of $10. And you look that it has fallen down to 4.17. And all this has happened as soon as they within 4 days of when they said that this is what is going to happen. They said that you're going to have a increasing price for Bluebird, and it's going to touch around $10. That was the target price they had given. And Bluebird has dropped 20% in a matter of 4 days since that prediction. It's in a terrible situation. And we also have the earnings coming up on 13th March. So that's again, earnings jitter is also there. Maybe somebody somewhere knows something bad. We'll find out. It's also possible that after earnings, it might jump back up. Who knows? Now let's look at Beam. Beam has also dropped significantly. Again, huge volumes here, my friends. Look at the volumes here. Let's go back to Bluebird. Bluebird also had high volumes, as high as it has had before. Not as high as what we saw on 16th of September, but pretty high. It's all the way up here, 4.03. Beam also has got high volumes. The volumes have overlapped the candle. It is so high, the volume is so high that it overlapped the candle. As you can see here, it's gone above the candle. So heavy selling. Invite has lost around 8.44%, and it's not looking good at all, very weak. Fate Therapeutics, well, again, back to the bottom, not looking good at all. Caribou Biosciences down 5.98%, still well entrenched in the bear channel. MACD, momentum, everything is absolutely bearish. PACB has gone down, and it has managed to stay above the line of support. It pierced down and it came back up again. Just pulling this out here. It came back up again, but not looking good. Intelia down 4.28%. 2 huge days of drops, and the MACD, momentum, everything red. CRISPR Therapeutics down 5.61. Again, for CRISPR Therapeutics, I know for sure CRISPR Therapeutics is a multi-bagger. It can make a lot of money, but friends, the bad thing about this situation is many people, including myself, have our capitals locked up. You know, if I was to sell something, I'll accrue losses. And if I buy CRISPR and CRISPR goes down further, I'll have more losses. And if it goes back up, I'll just recover my loss. That's all. So I'd rather stay put where I am, and many people are going to do that. And that's how the market will come to a seller fatigue situation where nobody wants to sell anything anymore. And people have resigned to their fate, and they say, oh, you know what, I'm just going to hold these things and see what happens. And that's when the market will turn. Till then, it's going to keep on going down. Look at the volumes here. The volumes are so huge. The volumes have gone and overlapped with the price candle for today. And that's really, really bad. Editas down 4.51% today. Someone in the comment section was asking me, I need more videos on Editas. And I was saying that if I get news, I'll definitely make videos on Editas. But without news, it's very difficult to make any videos. But look at the volumes out here, my friends. The volumes are so huge that it shows a lot of conviction or panic. So opposite of conviction is panic. I would say if the volume was high when the candle was green, I would say conviction. If the volumes are high with the candles red, I would say panic. People are just throwing away their stocks and running. Bionanogenomics down 4%. And they have earnings in which they had a EPS miss of 15.65%. So naturally, they're going to get shellacked. And they got shellacked. And everything is looking bad out here. ARCG down 4.15%. Again, look at the volume. The volume is so huge. It has overlapped the candle and it has gone beyond. It's gone beyond the candle and beyond the previous day's candle. That high a volume. So people have really given up. And there is an outflow of money from ETF, net outflow of money from ETFs. People are running out of all the things that they're holding in the stock market and hoping for something worse to come. Illumina is down 4.24%. Remember this doodle I drew yesterday showing the path for Illumina, where it's likely to go? I still hold to that, but right now things are looking really bad. And the chart is looking very weak for Illumina. And then if you look at SQZ Biotech, my God, what are they going to do with NASDAQ? It's at 0.67 cents. They have to do a 2:1 reverse split to get it to a decent level. And DNA is not far behind. DNA has dropped to 1.24 cents. This is really horrible. And I bought 1200 DNA with whatever money was left with me. and I thought I would do a quick swing trade, but it never went back to 1.48, the price at which I bought. So it's looking terrible out here. And so the market is really in a very bad situation. And in the middle of all this, we have got the new stimulus out here, where people are saying that we have this article here which says, this is in ca.investing.com, so it's a Canadian website. Expectations for 50-point Fed rate hike in March slip after payrolls data. So the opinion is that the probability of a 25 basis point hike was earlier at around 31.7% on Thursday, and now it has gone up to around 60% for a 25 basis point hike. So basically what it means is that the market is expecting just a 25 basis point hike from the Fed when the Fed announces the interest rate hike next. And that is definitely a positive catalyst. So my dear friends, I think that the markets are going to be choppy for quite a while, with the general bias being downwards. So it may go up and down. I think if you're going to trade in this market, you have to be absolutely alert. You need to know what you're doing. And most of the times, I must confess that in these kind of situations, I really don't know what's happening. And I will never lie to you. I'll tell you what I don't know, because I'm a fellow investor like you. And it's just that I have a YouTube channel. But in my mind, I think the markets are very dangerous right now, and it's very difficult to get in. And if you get in, you're most likely to get your capital locked up for a long period of time. So I would be very careful. That's my 2 cents of advice. And of course, this is not financial advice. Please do your own due diligence before taking any decisions. But it's at times like these that if you have capital that you want to invest, better keep it in cash, I would say, because investing anywhere in any asset class now seems to be very risky. Because if many big corporations had put their bonds put their extra cash into government bonds, and their yield has increased and and market value has dropped, then you're going to see that reflected in their valuation, because their book value will go down, and therefore the share price also has to go down. And then if those companies were required by statute to have a certain percentage of money in their balance sheet to continue their operations, like banks, for example, they will have to raise capital in this difficult markets. Therefore, there is going to be heavy equity dilution in order to make up for the deficit. So there could be some banks also which might have these kind of problems, apart from SVB and the other bank that we saw, that I spoke about at the start of the show. So those kind of things could also happen. So this can kind of start spreading around. And then when that happens, then the bank or the organization will let go of people to reduce costs. There will be layoffs, and then the unemployment rate will go up, and things can then go on a downward spiral. And then in order to bring it back up, the Fed will start reducing the interest rates. So that's what is a hard landing. They were expecting a soft landing. And I would be lying to you if I said that I know whether it's going to be a soft landing or a hard landing. I really don't know what's going to happen, because we have no visibility into who is doing what. It's only when the tide goes down that you know who is wearing. And we're going to find out about that soon in terms of who has been exposed into government bonds. And this need not be just American phenomenon. This could be a global phenomenon, because U.S. government bonds are held by various organizations and many nations in their reserve. So we'll see how far the contagion has gone. So friends, buckle up and stay hunkered down. Watch what is happening. Don't be in a rush to bite, because whatever you bite is going to be the hook, and you're going to be fished out of water. So be careful. And once again, before I sign off for the day, thanks to Inf and thanks to Jason for getting the HIV Patreon going. Thanks, my friends. Bye for now. Have a great weekend.